Hey guys, Wade here. Happy Sunday to you. I hope all is well. Not all is well with the markets, but we'll get to that in a second. I'm really making this video just to see where you guys' heads at. I know a lot of us are new to the space, so this is probably the first time you're seeing markets behave in this manner. But I'm gonna tell you, it's not all bad news. Okay? Tell you a little story. I have been in this space going on 3 solid years now, and that means that I've seen a couple of these bear markets. The biggest which 2020, pandemic, all of that, the entire economy crashed. And when you are new to a market and that happens, yeah, it's hard to bounce back. It is hard to still believe in what you initially got invested in, and what you initially put your money in. But if you stick around and you stay focused on your education, you'll learn that this market moves in cycles, okay? Particularly halving cycles, which is what I think is the dominating factor on Bitcoin's price at the moment. We are at a period of time during the cycle where, like I said in the community tab, this is a theoretical bottom, if you will. And we are now have to work our way back up. During the halving cycles, when the demand for Bitcoin it increases because the amount of mining rewards you get is reduced. So that also brings about scarcity into the situation. That's why every 4 years, Bitcoin usually has a run up and it reaches new all-time highs. This is how it has gone the last 3 times. And what we are about to see, guys, is number 4, okay? That's why I made the video last week, kind of just shedding some information on what those halvings are, what they mean, and when they happen. Because it was the halving in 2020 that brought me here. It was the halving in 2020 where I really made my money. And that's how I know that this isn't a cause for alarm, okay? Because on top of this, guys, we also have geopolitical tension, and the Fed is planning to raise interest rates incrementally for the rest of the year. So those 2 factors, combined with the fundamental factors of Bitcoin being in between cycles, we can expect for the market to be like this for a number of months. But with that, there's opportunity, and that's what we're going to really focus on in this video, guys, because unlike this time, last time I did not have an influencer around to tell me how to navigate what they were personally doing to navigate through a bear market. That's what I want to be for you guys, okay? The influencers that we have now, they've already made their money. But how they did it, they got in at the bottom of a bear market. We're talking 2018, some of them 2017, and they held on until the next cycle when Bitcoin ran up and it brought the rest of the market with it, okay? That's what occurred the last 4 years. That is how we have the crypto space that we have now. But that cycle is about to repeat itself again. Why I'm so excited, honestly, and you guys should be too, because this is the opportunity to accumulate. And one of the best strategies for accumulation is called dollar cost averaging, all right? DCAing, you'll hear it referred to as that. But in my first bear market, that's something I did not do. That was a strategy that I did not take advantage of, and I wish I would have, because my approach was, I call it the sniper. I would sit and wait for the dip, then take the shot, right? And that's how I caught VeChain at 2 cents, and we skyrocketed up to a quarter, 26 cents. Made some money that way, but it was not the most effective strategy. Since then, I have come to understand the effect of dollar cost averaging effectively. I can compare it to a basketball player, okay? You're in the gym, you're at the free throw line. The more free throws you take, the more you increase your probability of not missing the next free throw. Dollar cost averaging is the equivalent of stepping to the free throw line every day or every week or once a month, however you choose to do it, and taking your shot, okay? Over time, you're going to take so many shots, you're going to get so good, you're not going to miss. All right, dollar cost averaging is essentially the same thing, guys, where you pick a certain price point, 25, 50 bucks, 75 bucks, and that's what you shoot with every week into a certain project, multiple projects, however you choose to do it. Of course, I can't give you financial advice, but I can talk to you as if as if you guys were sitting across this patch of grass with me right now. Okay, but dollar cost averaging, something that we are going to get a lot more into this week on the channel. Okay, on top of that, another thing that we're going to talk about, staking and DeFi rewards, because the bear market is when those rewards tend to shoot up. All right, those high APYs, they were high because there wasn't that much activity on the network. The high APY was promoted in order to bring people in. Once people come in, those rewards dramatically reduce. But with this being a bear market, a lot of people are going to get out of the way. That's going to bring those rewards back up. The same thing is going to happen for staking and yield farming and all this other stuff, right? Perfect example, guys. Crypto.com just adjusted their rewards rates on the cards. The reason why they had to do that is because there were too many people online. If they were to continue the reward structure the way that it was with the amount of people they had, it wouldn't have been sustainable. Point blank period. Okay? But again, that is why I led with the overlaying factor for Bitcoin's price right now, because Bitcoin is still the leader of the market, and it would not have mattered if CRO crashed because Bitcoin was crashing. The timing of that news coming out was just coincidence. It happens. It does happen, but all of that timing was just and here's another thing. It wasn't just Crypto.com, okay? KuCoin, Binance, Coinbase, FTX, everybody was reducing rates for the exact same reason. Too much activity on the network, and they are aware. The institutions, they are aware of the halving cycles, guys. They are aware of that. So you'll see periodically them make decisions that ripple through the entire industry that everybody follows, and it's for a valid reason. It's always followed by a major move in price. They make a preparation move, then the price moves, and then they retreat back to where they were. You know what I'm saying? This is how it works. So with that being stated, guys, you gotta have tunnel vision. Okay, tunnel vision is the most important, because another thing you're going to see in a bear market is a brand new meme coin. We are going to get a brand new meme coin before this year is over. Okay, and you know it's true, because when I told you we were getting a second nation to adopt Bitcoin as legal tender, what happened a week later? Thank you very much. We're going to get another meme coin in the bear market, and I'm going to tell you why. Because this is when people are the most vulnerable. This is when they are the most desperate. They want to get in, they want to make their money. So there's going to be a project that come along promising these types of returns at high APYs, 2,500%. It's going to be attached to some celebrity. That's going to bring people into the market. The moment people come in, they're going to pull their liquidity right from under your feet, guys. So that's why having tunnel vision in a bear market is important. Okay, tunnel vision. The only thing we see, the only thing I'm seeing, are payment coins, utility projects, NFTs, metaverse. Okay, we are focusing on the utility, because we know we have been seeing the next phase for Bitcoin, for blockchain technology, is the payments renaissance. All right, we already know that's coming. So with that, we know which assets are leading that trend. Now these prices are lower, guys. We can prepare ourselves for when these applications develop. What we were just witnessing over the last 12 months, last 6 months, is the development stage, the progress, the creation of the protocols and applications that are about to bring major value to some of these chains. Okay, that's why I keep the content on this channel as diverse as possible, to give you guys the best perspective, because that's how the institutions are looking at this long term, 5-10 years at a time, and they're looking at the entire globe while they do it. So that's the perspective that I want you guys to have. So like I said, we're going to get more into some bear market strategies, some crypto money making strategies, and leaning into the hustle, guys. We got to lean into the hustle, because with these markets going down, this is the best opportunity to do so. So dollar cost averaging. We're talking staking, DeFi lending, more tips like that. And one thing I want to leave you with, guys, bear markets make millionaires. Period. Bear markets make millionaires. It makes many millionaires if we do it correctly. And like I said, last time I was in a bear market, I did not have an influencer that was going through the bear market financially with me at the same time. Okay? I have a goal by October 7th of 2024 to be a millionaire. You guys are now part of that journey. So, as in, it's just a byproduct of success. I'm planning on taking a number of you with me because I'm giving you the same strategies that I'm going to use myself. Funnily enough, that date I chose that date before I even got into crypto, before I was even aware of the Bitcoin halving cycles. I think we're on to something, guys. I think we're on to something. So, rock with me, stay focused, stick to the utility, stay patient. It's another thing too. You're gonna need to stay patient in a bear market, all right? You got in with the belief that these technologies were the future. The price does not matter towards that, okay? What we're waiting for is the adoption of the applications. And we are very close.